candlestick chart pattern. When we look at the candlestick chart pattern, we have to understand time frame, the structure, how the candlesticks form, and price. Now, to have a better understanding and experience, these candlesticks, we don't just look them anywhere. That we have, in this case, we have this engulfing candlesticks and it's time for us to sell. No, we don't look for these candlesticks anyway. We look for these candlesticks using what we call a chart pattern analysis, or a chart pattern that we can easily recognize. In this case, if right now we were looking for, let's say, a W, right, or an M, we are focusing on one specific area here and here. On this area, we're looking to take a buy. On this area, we're looking to take a sell, which is quite simple to see. Just like in this case, we have what? We have a down movement. We have the down movement, up movement, down movement. And here, that's where we are actually looking for the buy entries. Do you understand? We are looking for the buy entries over here. And now we can buy because of what? We have the engulfing here. Before we get to understand how the candlesticks work and the chart pattern that we should be looking for, I want to share something with you so that you can actually understand on what you should do and don't make that mistake. We have GBP USD, we have USD JPY, we have USD CAD. You cannot use a candlestick chart pattern that you saw on Australian dollar versus the Canadian dollar and use it on USD CAD or USD JPY. Why is that? USD CAD and USD JPY, they have different prices. Please understand, they have different prices, which means they have different digits. This one starts with 3 digits and this one starts with 1 digit. Do you understand? So meaning that if right now we are learning about the candlestick chart pattern that you should be looking for to confirm an entry, don't make that mistake of applying the very same candlestick chart pattern that we're going to focus here. And now, to demonstrate everything very well, let's just use the New Zealand dollar versus the US dollar. Now let's actually mark a structure. Let's say this one is our what? Our double bottom over here, because we have a 1 and we have a 2 and then we have a 3 over here. Now on number 3, we want to take a buy entry going up. And when we go up here, we also have another entry here as counting 1, as counting 2. Do you understand? Now, 1, 2, 3, section charts, NZT USD. We are looking to take a buy here. We have an entry, right? But I want to explain the candlesticks on how they work so that you can actually understand how the candlestick works. Candlesticks, they work with time frame. Since I've mentioned that we have what we call a time frame, and the time frame for you to confirm an entry using a chart pattern is using 30 minutes up until 1 minute. Now let's explain the candlestick, or take you to understand what candlestick that you should be looking for in terms of confirming a buy and confirming a sell entry. Now let's make an example here. We have candlesticks in many ways, but I want us to understand. We have a number of candlesticks. We have 1, we have 2, we have 3. Right? Number 1, we have a candlestick which we can call it a hammer, just like in this way. Do you understand? And then on number 2, we have 2 candlesticks which you can call it engulfing, just like this. On number 3, we have a candlestick which we can call a morning star or evening star. Do you understand? So these are the 3 candlestick chart that we actually be looking for. Then we can find them anywhere, but we are looking to have this candlestick in a specific key area, which means we are looking to find them here. We are not looking to find them anywhere where the graph or the chart is moving, because we want to have a structure, we want to have a pattern. Now, in looking at our candlesticks over here, we have a hammer, and these candlesticks, they have different colors. I want you to understand something. This one is for the buying, this one is for the buying, and this one is for the buying. And now the one for selling, all right, the one for selling, 1, 2, 3. The one for selling will be in this way, which means will be opposite this one, and will be this way, so that you can understand much better. Will be this way, all right, and the last one will be this way. You can see that these candlesticks, they oppose each other. Now this is 1, 2, 3 candlestick chart pattern that I can actually give you at the moment. We have up until to 10, but just for you to actually understand and get a better experience, let's start here. Now when we look at the candlestick one here on number 1, this is what we call the hammer. It's still the hammer, it's just that it's opposite, but it's still the hammer, still engulfing, still an evening star, or we can call it morning star, doesn't matter, as long as you can be able to reference and recognize it and be able to go back to use any sort of referencing point that you can actually use on the chart. Now when it comes to finding this chart pattern, remember I've mentioned that we have price, right? Each and every candlestick here contain a very simple thing, and this is something that you should be actually careful and understand. Each and every candlestick will be in this way. Here we have an open price, right? And here we have a close price. Above we have a higher price, which is an edge, and below we have a lower price, right? This is a candlestick of a sell because the close is below. Now for the candlestick of a buy, it will be in this way. The close will be above and the open will be below, and below will have a low price, above will have a higher price. Now this is important to actually understand what is happening and how to use these candlesticks as in terms of understanding the momentum, which is the filled up color. All right, maybe I can use a referencing point for you to gain a better understanding. This is a candlestick for buy, which is green. You can see the open price is below, close price above, high price, lower price, and the one for sell, high price, open price, and lower price. This is a referencing point to actually make you understand much better. So now let's look at, as I've explained here, let's look at these candlesticks over here. These candlesticks, they form a pattern, and this pattern can be used to confirm an entry of buy and sell, as long as you are able to mark your structures in a better way. But when you mark a structure, you mark a structure using what? Using a higher time frame. In this case, you can use a monthly time frame, weekly, daily, 4 hours, 1 hour, up until 1 hour. Actually, let's say from 1 hour up until a monthly time frame, you can actually mark your structure, which is quite simple and easy to understand. Do you understand? If you have any difficulties, let me know on the comment section below. So now the price come in play here because we have a closed price, we have an open price, and between here we have a range, which is in this case this price is recorded here. So that is why we have this formation of these candlesticks, which means if right now we look at engulfing, what makes engulfing? We have a one candlestick, we have a second candlestick, right? On number 2, the first candlestick contains an open price. It contains a closed price because this candlestick is a candlestick of a sell. In this case, we have this candlestick over here that is a red, just to make sure that you understand. And we have this green or blue candlestick if you're using a different chart than mine here. Now, when we compare this one and this one is more than this one, right? This one is less than this one, which means if we check the difference between here and here, we find that it can be around 400 points. It's just an estimation. Using the price, because each and every time a candlestick opens, it will create an open price, lower price, high price, close price. So if right now we confirm that this is 400 points, that means that if we have to be accurate with analysis, using a different asset, in this case we're using the Australian dollar, the engulfing will not be the same in terms of confirming an entry when we're using the Australian dollar with when we compare it to the New Zealand dollar. Now when we look below here, this is still the same as 1 as 2, and we have an engulfing, and we have 3 candlesticks, which we have 1, we have 2, we have 3. These 3 candlesticks, what we call a morning star, as I've explained on this one over here. So which means we are taking buying entries to make a buy because of the structure of the market. Do you understand? Engulfing, as I explained, engulfing, when we trade the market, please make sure that you're using the same broker that I actually recommend, so that you can be able to have a lower spread. Because if you don't have a lower spread, the candlestick pattern that you should be looking for, you might not find them in the same way that you should be actually getting them. So in this case, let me show you. I've managed to actually take a trade on gold here, not gold, volatility 75, because most of the time at the moment I prefer to trade gold, but I took a trade here. And when we look at the margin here, why I'm touching this in terms of risk management, so that you understand the risk that you're taking, you don't actually lose more money. Be careful of lot size, be careful of margin, because margin is money that is not meant to be lost. So make sure that you don't go full margin, because you'll easily have less equity here, which means it will put you on negative on free margin, and it will affect your margin level. Do you understand? So make sure that when it comes to risk, you take that into consideration and you understand on what you need to do. So let's look at another example. We have this structure over here. All right, we have 1, we have 2. Now after we have 2, right, we have this engulfing candlestick, which means we take an entry over here. With stop loss will be above over here, but you must actually understand the number of points when it comes to trading. And if you have some difficulties in understanding that, we have another tutorial in this channel. So now let's check. This is MetaTrader 4, and when we look here, well, we are looking to take interest of a buy. When we look above here, we have 1 and 2, which means we are taking sell, but then we have to actually use a time frame, a small time frame, which is 15 minutes. If we use 5 minutes, and let's see if we can get engulfing. We had an engulfing over here to take a selling entry. If right now we decide to sell because the market is actually has left us here at this point here, it is not recommended to take an entry from here to here, because if right now we use MetaTrader 5, let's use MetaTrader 5 and show you. All right, this is MetaTrader 5. If we check on MetaTrader 5, we have this, and let me zoom in for you. We have this here, all right? Seems like a engulfing, but it's not, because the open price is below than the previous candlestick that happened. So in this case, we can actually zoom out, go to 15 minutes, change time frame to 15 minutes, and when you zoom to 15 minutes, we can see that we are waiting to take an entry of a sell over here. But now we can go ahead and get in with a buy, but that's not recommendable. If we change time frame to 1 hour, we can see that below here we are looking by expecting to take entries of buys over here. Now we can change time frame to 4 hours, right? Now when you go to 4 hours, we have a number 1 here, we have a number 2 here, and it's telling us that we are buying. So meaning that whatever that we do in smaller time frame, we should be in line with buying. We have this engulfing here, and this engulfing, we have also 1, 2, 3 candlesticks that form a what? A morning star. We have an evening star and a morning star. If you're someone who doesn't understand that, let me know in the comment section below. So now I trust you to understand as to how this marking the structure is, right? I trust you to understand marking the structure. So make sure that if you right now you've marked your structure, let's say you've marked your structure below, and you counted 1, you counted 2, you see the engulfing here, you wanted to buy, you must check the difference between here and here. And if you find that maybe, let's say, it's more than $10, you should not take the trades if right now it's more than $10. And from here to your exit here is you find that it's around 20, then it's up to you if you should be actually taking the trade or not taking the trade. But I recommend that you have a better understanding, you do your analysis, you actually go through this analysis in terms of analyzing the candlesticks, because the candlesticks, they're just a way for you to confirm an entry if right now we're buying or selling. But the calculations that are involved and brokers to brokers are not the same, asset to asset are not the same because of the environment that they are in. So make sure that you're trading with the best brokers that I'm using. And also, you can see we have this structure. You can use many strategies out there if you're looking to have strategies. These are the chart patterns that are actually mostly easily for you to start with. For me, I started with engulfing. Which is one candlestick that I actually mostly prefer to actually trade with. So with that being said, I love you all. Stay blessed.